Hello, everyone, and welcome to CoinShares The Talk. We're here with James Butterfield, Matthew Kimmel, Alex Schmidt, and Christopher Bennigsen from the CoinShares Research Department. Hello, guys. How are you doing?
Very good.
Interesting.
Thank you for having us.
Interesting program, yes. My first question, actually, that wasn't written, was just quite simple. Are we in a bear market yet, or is it like not really defined? What's your thoughts about this? Because like right now we are bouncing, Bitcoin is showing some strength. So what is your opinion, guys?
We've
James,
been
maybe.
in a bear market.
I'll start off. I think we've been in a bear market for some time, for most of this year, close to the end of that bear market. And this is a discussion the team we've been talking about quite a bit recently. I mean, I think over the last 2 to 3 weeks, we've started seeing indicators that are showing sort of peak bearishness. Chris can perhaps talk about futures positioning and perps positioning, but certainly if you look at stuff, more technical things like the relative strength index, just 3 weeks ago we hit 16, and anything below 30 in relative strength index is extremely oversold territory. So that's quite an encouraging sign. The last time we saw that was in 2022, mid 2022, quite close to price lows. Obviously we've hit the 200-day moving average and recovered and bounced back through that again. We're seeing valuation indicators. The one I really like is MVRV, market value over realized value, which is just basically market cap over the aggregate cost at which people acquired the Bitcoin. And that's at multi-year lows. It's not quite one time standard deviation low, but closing in on it. So it looks quite attractively valued from that perspective. And then, I think we've had 3 weeks now of inflows. We're on track for 527 million of inflows this week so far. So there does seem to be a bit of a turnaround in sentiment, although it's quite cautious. So to me, that I'm always careful when I say this, but it does look like we might be about to pull out the bear market. I think there's quite a lot of choppiness to look forwards to. We don't know where oil prices are going to go, and if they do stay quite elevated, the US could easily plunge, and the world could easily plunge into a recession. So it depends how long it remains elevated for. I think that's very hard to tell. And it does also suggest rising oil prices suggests inflation is going to remain quite sticky, and therefore interest rates will not be cut anytime soon. Something Bitcoin's been really moving off the back of in recent years. But I think actually what's really encouraging about all of this is that geopolitics have really favored Bitcoin throughout this crisis, much higher than any other asset class. Most other asset classes since the crisis begun are flat or down, and Bitcoin's up around 6 or 7%. So that's incredibly encouraging.
Though, what could explain the previous behavior of digital assets? You started to mention that with the raise, but we could expect that with this US administration, with the Trump administration, like crypto was going maybe to find like new levels, and it didn't act like that. Actually, quite the opposite. And maybe we could also like guess or assume that the association with this administration has been like quite hurtful for crypto. What do you think about that? Do you agree first? And do you think that maybe this administration wasn't that good for the digital asset landscape?
I think broadly it was really positive for digital assets. So the worry is that if Trump loses midterms and he loses influence, and it's not so good for Bitcoin prices. I mean, the Strategic Reserve Act has been, I think, a huge boost to kind of confidence for corporations. The biggest government in the world holding Bitcoin and really condoning it, I think, is a very positive thing. Various different regulatory acts, and then more favorable things like Ethereum, these stablecoin and Genius Acts, now the Clarity Act. I think the passing of those, I don't think the Clarity Act's quite passed yet, but the passing of those has been, I think, really for digital assets, and they're bills, they're acts of Congress, so you can't reverse them with a new sitting president who can just reverse them with an executive order. Yeah, that can't be done. So I think that's a positive. So even if Trump, I think, is maligned in the midterms, which it seems quite probable now, I don't think it would affect the Bitcoin price. So I think broadly it's been actually very supportive. But on the flip side, it's led there on the policy side, it's been very supportive, but I think on the geopolitics side, or just say the trade, tariff, things like that, have generally been quite bad, detrimental to Bitcoin in particular. So, Trump giveth on one hand and taketh on the other hand. So, but I think broadly on aggregate, it's probably been quite supportive.
Matthew, you wanted to weigh in maybe?
Yeah, I think generally very positive throughout the administration's term thus far. A lot of long-term structural developments and a change in tune from kind of more aggressive enforcement actions against the crypto industry to giving a bit more of a sandbox to develop and innovate. But, throughout, from the start of the Trump administration, you have a subcommittee at the SEC dedicated to digital assets, the most important financial regulator, certainly in the US. And then you have a working group at the White House directly. James mentioned the Genius Act, the first codified law related to crypto, more IPOs than any other administration, right? So I think these are long-term really positive developments. I do think because of how public and vocal the administration's been on crypto, it probably spurred more speculation in shorter time frames, which lets the market get over its skis, and then you experience some pain when that hype reverses. But I think when we look out years down the line from now, and as James said, the policy, different aspects on a regulatory policy and corporate level, I think you'll probably look back and see it as quite a positive period.
I don't know whether or not you saw the news today, but it seems that the CFTC and the SEC are putting their rivalry aside. They are on a way to merge a common framework to handle crypto regulation. Can you detail what exactly there is in this memorandum of understanding, and how it could affect the crypto regulation in the US?
Yeah, I think it just is a framework for let them to formally communicate. I think it's good for crypto because I think crypto, there are products that I think blurs lines between the two. It's a novel area, right, of markets that's being built out without cleared and codified law about it. And because of the nature of how it works and laws that have previously been passed related to finance, it requires a bit more nuanced thinking, I think. And so I think it's a positive that they're willing to formally engage and share information. A lot of work to be done from here, certainly. And what exactly that means, I don't necessarily know. But I mean, you have things like prediction markets and event contracts. You have different companies that are offering a range of products that maybe typically would need reporting to each specific agency, and so I think it makes a lot of sense, and I'm glad that this has come out.
So we mentioned that Bitcoin was bouncing back. There's an asset that we haven't mentioned yet. It's ETH. Unfortunately, Luke is not there with us, but ETH is quite disappointing right now. It's been in a negative streak since September 2025. Basically, it's struggling to reclaim the $2,000 level, the $2,000. Do you see this as a structural problem for Ethereum? Do you see a problem with the investment narrative of ETH? James or Matthew?
Yeah, I'll start. I mean, I think there's just been this big challenge since Den Kuhn and other upgrades over the last couple of years around how the layer one makes money. There was obviously the original problem of transaction speeds being very slow because every part of the network was validating every transaction, and high gas fees. And now they've gone the other way and just almost handed it to layer twos, where transactions and activity is really rising rapidly, and that's really encouraging. But obviously ETH, the layer one, has lost their its income streams in a way. So people are wondering, how does Ethereum recover that without a huge rise in scales of layer two? So there is a bit of an argument going on at the moment as to perhaps they make some changes to actually recover some of that income generation back to layer ones. I think I've always felt Ethereum in the last couple of years has been unduly beaten up. And I think investors have felt the same, certainly ETF investors who've allocated substantial amounts in the final quarter of last year. I think that was off the back of the Genius and Stablecoin acts. And I think that cohort of investors see Ethereum actually as having quite a promising long-term fee environment for it, or sort of income generation stream. But yeah, obviously a lot of the market doesn't, and it's also very vulnerable, I think, to geopolitics and trade tariffs and everything, tech stocks. So it has, quite a high beta to Bitcoin generally. But I do really like it, and I think one of the big reasons is the growth, the potential of the stablecoin and stablecoins, particularly after Stablecoin and Genius acts. They've got huge potential growth, and the main payment rail that's going to benefit from that is Ethereum at the moment. And so I do think you have to kind of perhaps look quite far out, have quite a long-term perspective to invest in ETH. But I think it's quite compelling, and I think markets are overly punishing it. But I'm happy to hear any alternate criticism to that.
I'll weigh in here. I think competition is ripe amongst these layer one smart contract chains, and there's no clear winner. Ethereum's the category leader, but it's unclear who the category winner is going to be, right? And maybe the market is just kind of reverting to the mean a bit. That Ethereum is not that far ahead as maybe history would have figured. You also see like an increasing number of kind of corporate consortium partnership announcements and chains forthcoming, I think, in the future years. And there's an outstanding question of whether, say we assume here, like there's an increasing expectation that crypto rails are going to a degree modernize, revolutionize, pick your buzzword, finance, right? And really improve a wide range of efficiencies. Well, where's that value growth going to come for investors? Is it going to come more from an equity side, or is it going to come more from a token side? That's an outstanding question, I think, that is going to be weighed by the market over years, right? Usage of these things are growing. Stable coins and tokenization, right, as themes are kind of increasingly impressive, I think, garnering real world adoption. But what does it mean for investors? Is what is the supply demand story that's going to shake out with these tokens? Which companies are leading the charge and going to build out revenue lines off the back of this? I think that because there's these outstanding questions, right, and it's not clear cut that ETH will win, right? I think it's probably taking that on as well as we're just in a broader crypto's been beaten more than pretty much every market segment, and ETH is not immune to that, right? Bitcoin, altcoins in general, from the start of Q4 to now, have all been caught in the storm.
Speaking of a potential winner, there is one that has made headlines of the past 2 weeks. I want to speak about Hyperliquid, of course. So for those who are watching us, there may be a few of us of them, and that don't know yet Hyperliquid, which is like basically a smart contract platform, which is hosting a perpetual futures market with permissionless access to some perp markets, thanks to a feature called HIP3. Recently, in the past 2 weekends, basically Hyperliquid recorded over $1.2 billion of volume, and mostly on tokenized equities and commodities such as oil, gold, and silver. It was basically the only market open during the weekends. And the top markets was actually mostly commodities and equities. There were only 7 of the top 30 markets tied to crypto pairs. Do you view this as validation of Hyperliquid thesis as a 24/7 trading venue? And simultaneously, do you also think this proves there is decreasing demand for native crypto assets, since most of the trading pairs were mostly commodities and tokenized equities?
I think this is a massive leap forwards for just crypto in general. The fact that suddenly, I think one day in February we saw $1.2 billion worth of gold, silver, and platinum. And copper, traded on Hyperliquid. And just to put that in perspective, that's 1/4 the size of the FTSE 100 daily trading volumes. So that's huge. And larger than the traded turnover ranges across Europe. So I think this is a really encouraging sign. I mean, if you look at overall real-world assets, they still remain very small. I think total assets in real-world assets is only around $35–40 billion, so it's pretty small. But yeah, it's so encouraging to see that, and just when we. And also, I think it shows a native crypto investor that's keen to trade assets, real world assets on chain as well. And actually, CoinShares, our trading team, is trading quite extensively on Hyperliquid now as well, and finds it very easy to use. It's working 24/7, which is different to most other traditional exchanges. I've always wondered which exchange would benefit the most. Would it be Uniswap? Would it be Hyperliquid or something else? I think it's always really hard to guess. But it does seem at the moment the popular exchange seems to be Hyperliquid, and that's an incredible start. And we're watching it very closely to see any kind of further growth in that asset.
Yeah, I think to your question, I agree with what James said. To your question, Jeremy, is this validation of crypto? I think it is, but what's interesting to me here is I think it's indicative of just the demand for markets to be more 24/7 and more global. And I don't think it matters that Hyperliquid is a crypto or not a crypto. I think they've built a product that people want and desire, or it's reflective of that trend, right? Markets becoming more global, more 24/7, and it's an available venue to do that. And they've listed now not just tokens, but markets that reflect commodities, metals, right, so on and so forth, and it's serving that use case. And that's what I think is
the current geopolitical crisis as well, like many the announcements that Trump made, happened at the start of a weekend. So most investors would have had to have waited until Monday to execute any trade, to express any kind of investment thesis off the back of it, and we'll have to wait till Monday. But with Hyperliquid, it was immediate, and the same with Bitcoin for that matter as well. So there's real, I think, apparent benefits from the Hyperliquid platform and similar ones.
Alex, it's not really factual that I want to ask, but you are equity analyst. You speak with companies, and how is it perceived, this like growth of tokenized equities? What's the trend right now? What is the mood when it comes to speaking of tokenization of equities?
Yeah, I think there are two ways that investors are going about this. I think one of them is end companies. Some of them are embracing it, creating new technologies, new rails, to transact between companies, and I think that's something quite positive that's happening in the industry. I was just in Japan. I was speaking with the head of Asia for Galaxy, and he said it's just providing them a much better way of doing things that banking institutions were not able to, given their old legacy systems, and putting securities in tokens allows them to use the blockchain ecosystem, which I think is much better geared towards that kind of transaction. But on the other hand, there's some people who are a bit more skeptical. Why would you stick treasuries in tokenized vehicles, given that you already have that? Is this reinventing the wheel? Why you're doing that? And yeah, so I think there are two angles at it, but I think this is definitely one of the big themes of 2026. I think you're on mute, Jeremy.
Thank you, Alex. ICE, the NYCSE, parent company, has announced an investment in OKX for tokenized to tokenize to build a tokenized venue as well, tokenized trading venue. There is also Kraken and its parent company Payward that has announced a partnership with Nasdaq to create a settlement layer for tokenized assets. How does this change this competitive landscape with Hyperliquid? Do you expect Hyperliquid to keep its competitive advantage? And also maybe with the leading centralized exchange Binance, which seems more and more isolated, do you expect that the traditional venues, the traditional players will in the end win this market?
I mean, I think one of the theories around blockchain is that it's not going to take over traditional finance, but it's going to run alongside it. And I think that's a more realistic view. I think at least in the short to mid term. So yeah, I mean, I'm not surprised that you're getting these venues, trying to innovate, with new technology, adopt what's coming out there, because if they don't do that, they're going to fall behind, and you're going to have the NYSE and Nasdaq again, but in the tokenized world, and that's going to be interesting as well. So yeah, I mean, it's only natural. Banks are adopting blockchain wellways as well. I was speaking with a bunch of companies last week, and lots of banks have lots of plans in this area. I think they're all waiting for regulation to become clearer so that they can pull the trigger. But yeah, they have teams in place. They have, and they've always had it. I think it's just becoming more obvious now that because I think this story is unraveling finally.
James,
I think Kraken has just secured a master account with the Federal Reserve, and I think that's an incredibly positive, just broadly for the industry. I'm not sure though that and some of the other news around Kraken, I think it shows it's making big moves in the space, but I'm not sure it necessarily threatens Hyperliquid directly. I think there's a huge amount of room for both to coexist, given there's trillions of dollars of real world assets out there. And at the moment, I was just looking on RYA, actually, the total amount of assets in RYA assets is only around 30 billion at the moment. So it's still very small markets. There's huge room for growth. I think it will ultimately come down to the usability of the platform, and clearly people like Hyperliquid. Some people are saying that actually Hyperliquid's model, when DeFi really gets its act together, will really threaten Hyperliquid. I'm not so sure at the moment, but and I think that we really only have to entertain that viewpoint when the DeFi market matures, which another year or two away before it genuinely threatens Hyperliquid's business model.
Chris, you've been quite silent, and it's my fault because I haven't mentioned Bitcoin a lot. And maybe this is the question: where does that leave Bitcoin? I know that currently Tether is currently trying to launch stablecoins on top of Bitcoin. Do you see Bitcoin having its role in this tokenization landscape? Do you think it still doesn't matter for Bitcoin? How do you see this new paradigm with Bitcoin?
I think tokenization of real world assets, I've been saying this for a long time, is going to be done on private chains. I don't think there's much room for like actually decentralized settlement of this, because there's no recourse and you can't have two competing systems of adjudication. You have to have one that overrules the other, and real world assets are subject to normal jurisdictional law, and I've been looking for years for someone to explain to me how these two systems are going to coexist if the actual settlement system can't comply, like Ethereum. So I don't think there's much role. To the extent that crypto tokens survive in a meaningful form going forward, then I mean, if there's a chance that this ends up migrating onto some Bitcoin layered systems, I don't think it's very interesting or important if it does. I think I suspect that the larger corporations out there that are already involved in settlement, we've seen the moves by the DTCC, the recent move with NYSC and Kraken. They're trying to make alternative settlement rails. It's the big outstanding question for me is, how is there going to be interoperability? How will that work? Will there be two fragmented pools of money? That is kind of what it seems like, that are just going to have to grow organically and independently of each other, and then just see if, if basically the tokenized, if you're a bank, like, how do you deal with this on your balance sheet? You have all of these settlement timing offsets that can just be highly problematic for you. How do you deal with it? Do you have, the best suggestion I've heard is you just literally segregate everything inside of your company. You basically have two balance sheets. You have one for the tokenized world, one for the traditional world. And if it over time becomes clear that the tokenized one is growing much faster because it's a better system, and capital is slowly bleeding over there, then yeah, maybe it could take over. It'd be an interesting dynamic in that it seems like there might be some step change moments when there might be a flood of capital from one system to the other, if the tokenized system turns out to be a lot better. There could be these flood moments. I suspect that Bitcoin is going to play a huge role as collateral, but I'm almost I don't even want to really muddle the roles of the Bitcoin settlement system with these alternative token settlement systems. I'm much more comfortable with Bitcoin staying in its lane and dealing with what it should deal with, which is actually extrajudicial settlement of value in an international way. That's enough. Let's not try to bite over more. I think it only invites more regulatory attack surface, legal attack surface, potential problems. Just it invites involvement from politicians in ways that we just don't want. So I almost hope that doesn't happen at like a huge scale. And my suspicion is that it's going to happen mostly privately anyway, in these maybe in a distributed way, but not in a decentralized way. I think consortiums might be the future, but not decentralized settlement networks for legally grounded assets. I just think that sounds strange.
We'll stay within the traditional finance world a bit with crypto-related stocks, notably Coin, Master Strategy, Galaxy, Hood, which surged between like 6% and 40% for Coin over the past month. How do you explain this? Is it institutions which are leveraging a beta play versus Bitcoin? What can explain the recent behavior of these stocks according to you? Maybe Alex, maybe James, maybe
Yeah, I can start. I think, well, first of all, these stocks have been, quite. They haven't performed very well since, peak Bitcoin in October last year. They've been on the decline since then. So I think, at some point they would become interesting. There would be interesting points of entry for investors. Which could be now, especially given how Bitcoin is outperforming other traditional assets amidst all the global uncertainty that we're going through right now. So perhaps it got a little bit more attention as it's tied to Bitcoin, and as we know, some investors only have these means to get into exposure to this ecosystem. Looking Strategy, they've been active again. They're purchasing Bitcoin again. I think Stretch is helping them with that. So that's one factor. That they're back in the news. Let's say, Circle, has done very well in their results, especially when it comes to profitability and the adoption of Circle. So I think the positive headlines as well that investors are looking at and thinking these are depressed businesses right now in terms of price, and perhaps this is an interesting entry point to get in.
Are you surprised by Strategy and its ability and the capacity of Michael Saylor and his team to display such signs of life? Like quite recently, everyone was expecting Strategy like maybe to go down, or I don't know. It was maybe another exaggeration, but it was the mood when it came to Strategy. Now it purchased like I don't remember, like almost 17,000 Bitcoin for over $1.2 billion, thanks to Stretch and its preferred stock. So how are you surprised?
Yes and no. No, in the respect that I think Saylor will never stop buying Bitcoin. What if he has the means, he will continue buying. That's it. Period. And to be fair, at current prices, I think it makes sense. One of the criticisms of investors of Strategy has been that they buy expensive, and when it's cheap, they don't buy it. It's mostly because they usually don't have the means to buy it, or have access to finance when Bitcoin is low, which makes sense. But the reason why I am surprised is, given how popular Stretch has become, with people piling in, them being able to raise quite a lot of capital using this vehicle. I had a meeting with Saylor myself in November last year, and he signaled that this was the next level of his strategy. Like, I think it's going to be the focus now for the time being this year, perhaps. Raising lots with that instrument. And I think what's interesting about it is that a lot of people perceive Strategy as having a very solid credit rating, right? They they are uber capitalized. They have tons of Bitcoin. Whether they're going to sell it or not, that's another question. If needed to settle the debts and stuff, but looking at their balance sheet, it looks very robust, and people buy these instruments believing that it's going to pay 12.5 or 11.5. Sorry,
11.5. Yeah.
11.5, and it's very attractive. When you are in a system that yields so scarce, and Bitcoin is not performing as people would have wanted, it becomes a really, really interesting instrument. So yeah, I am surprised that people are piling in, but thinking about it, perhaps it's not surprising.
Matthew?
Yeah, I think what's interesting about MicroStrategy, right? So people may forget a bit that MicroStrategy started buying Bitcoin in 2020, right?
Yeah.
So they've been doing this a long time. But what is different, we talked about at the top of the show, we're in a bear market. We're calling this bear market. The previous bear market in 2022, Michael Saylor wasn't really able to stack much coins, while it wasn't trading at a premium, while Bitcoin is trading below their cost basis, right? And that's different right now. I think that gives credence to some of these instruments that they've released and kind of tested out over the recent years, and that they actually have some sticking power, some demand that's now fueling their purchases now in, again, a depressed environment. But now they are still able to accrue capital to buy Bitcoin. That's fascinating to me, and I think it like is different than a lot of the other digital asset treasury companies. And B, it also kind of quabbles with some of the other kind of reflexive bear market Bitcoin selling like tendencies across companies. What I mean by that is like Bitcoin miners, for example, in downturns tend to not necessarily have the strongest of timing when they're selling their coin. So we've seen that lately as well, and that MicroStrategy may actually be able to quell some of that. I'm interested in Chris's thoughts on this, but I've been thinking about that a bit lately.
Yeah, I mean, I would say they're not just quelling it. Since October 10th, MicroStrategy has bought over 100,000 coins. I don't know if people like take in the magnitude of the size that we're talking about here. It's an insane amount. I think if you stretch that out over that entire time period, that alone has probably absorbed all new issuance plus all the miner selling just by themselves. So I think it's very interesting that they found a way to finance themselves during a bear market by putting in an instrument that returns anything during bear markets, making it attractive comparatively when Bitcoin's going down, and then when Bitcoin's going up, then the MSTR share tends to front run that, and they're able to use that as a financing tool to buy even more Bitcoin to create this like reflexive loop. What is the end game? I don't know. I don't know. I don't know if anyone knows. I don't know if Saylor knows, but it's been fascinating to watch them go from one product to the other that actually does seem to work. This is a big milkshake that they've just put their straw into, and they have what is it, Alex? Is it 40 years of dividend coverage, something like that, like at current prices? At 11%, like that's looking pretty good. So
yeah, but I always worry. I mean, let's be honest. This company has used various quite imaginative kind of schemes to game the convertible bonds industry in various different parts of the financial world to kind of achieve value, I suppose. And I just can't help but think in the long term it all could go horribly wrong somehow. I mean, at least I mean, that is very much predicated on the Bitcoin price absolutely plummeting. If it doesn't, at least they've got the backdrop of quite an asset, in my view. But it is quite interesting that he just uses these increasingly inventive different ways of adding more Bitcoin to the balance sheet. And I do think as more credible companies add, people will start to perhaps ignore MicroStrategy a little bit more. I mean, but yeah, I mean, STRC or Stretch is, I mean, incredibly attractive. I mean, the yield is almost triple that of a 10-year Treasury bond, 10-year T-bill. So, yeah, but how long can it go on? I think we just have to be very cautious with this company.
Look, Bitcoin could go to zero, and then everything falls apart everywhere in this entire industry, and it all goes away, right? That is possible. But for every year that doesn't happen, the chances of that happening just diminishes. I also don't think there's anyone else, and I don't think there's going to be anyone else, because Saylor has already grabbed all the coins. Where is anyone else going to ever be able to accumulate almost 1 million Bitcoin? Who's going to do that? I think it's going to be just more of an over window thing, where over time, as it doesn't collapse, if it doesn't collapse, right? People are just going to be increasingly comfortable with it, because right now, given the history and given what they've done, it looks hairy, right? But every year where it works, it looks less hairy. It's kind of the same as with Bitcoin itself. Nobody thought that Bitcoin was going to go anywhere within the first few years, let alone become $1 trillion asset class. That was just ridiculous. You would have been laughed out of the Bitcoin forum if you had suggested that. So there is a weird there's a weird time element here where a lot of these companies and I mean this whole industry is kind of like making it up as we go, and this is completely new. We have no idea if it's gonna work, but every year that it does work, I think it becomes a little less hairy for people over time, and it just grows that demand pie a little bit bigger. So I think he's in a very, very interesting place where he's gonna probably not have huge competitors come in and eat into his market here, if it all works out.
Let's see. We'll talk about that again, likely in a month. Thank you for your time, guys. 200 viewers. Thank you for being with us as well. I'd like to highlight 3 articles that you recently wrote. There is an article related to the Bitcoin price during the Iran conflict, written by James. It's on CoinShares.com. The recent bi-weekly digest, which has been published yesterday, I guess, and the latest professional Bitcoin ownership report written by Matthew, also on CoinShares.com. I have posted the links below the stream, so feel free to read it. Quite insightful. Thank you for your time, guys. See you in a month.
Thanks, Jeremy.